2018, a single policy decision set off a chain reaction that would ultimately destroy housing affordability in 5 major American cities. That decision was the implementation of sweeping tariffs on steel and aluminum imports, beginning in March 2018. What followed was a cascade of unintended consequences that transformed construction costs, home prices, and real estate markets across the country permanently.
Here's exactly what happened to these 5 cities, how the tariffs destroyed billions in economic value, and which 5 real estate markets got hit the hardest as a result. The decision, Trump's tariff policy.
Your decision from the U.S. Supreme Court just moments ago, a 6-3 decision. Most of President Trump's tariffs were invalidated.
In March 2018, President Trump announced 25% tariffs on steel imports and 10% tariffs on aluminum imports, with the stated goal of protecting American domestic steel and aluminum manufacturing from international competition.
The policy was framed as an economic nationalism measure designed to revive American manufacturing and reduce trade deficits. What happened in the immediate aftermath was exactly what economists predicted would happen. American steel prices, which had been trading at roughly $600 per ton before the tariffs, jumped to over $800 to $900 per ton within months. Aluminum prices similarly spiked from roughly $2,000 per ton to $2,800 to $3,000 per ton. These weren't marginal increases. These were 30 to 50% price explosions in the commodities that formed the literal backbone of American construction. Construction companies that had been budgeting for projects based on pre-tariff steel and aluminum prices suddenly faced massive cost overruns. A commercial building project that had been estimated at $50 million might suddenly face $60 to $65 million in actual costs once tariffs kicked in. A single-family home that had been estimated at $350,000 to build might actually cost $420,000 to $450,000 once material costs spiked. For residential construction specifically, this was catastrophic. Home builders operate on razor-thin margins, typically 8 to 12% on each home sold. When material costs spike 30 to 50%, those margins get obliterated entirely. Suddenly, building new homes didn't make economic sense anymore.
Builders who had been planning to build 100 homes in a year pivoted to building 60 or 70, or simply stopped building new construction altogether in markets where demand couldn't support the higher prices. The tariffs lasted from March 2018 through the end of Trump's presidency, and the damage to construction costs was permanent. Even after some tariffs were negotiated down or partially waived for specific countries, steel and aluminum prices never returned to their pre-tariff levels.
Material costs remained elevated, which meant construction costs remained elevated, which meant home prices remained elevated in new construction markets. City number 1, Austin, Texas, the construction boom that never happened. Austin was in the middle of a genuine construction explosion in 2018. Tech companies were relocating to the city, remote workers were flooding in, and demand for new housing was at an all-time high.
Builders had planned massive expansion, with dozens of new subdivision projects in the pipeline, each planning to build hundreds of new homes. Major builders like D.R. Horton, Lennar, and Pulte Homes had billions of dollars committed to Austin projects over the next 5 years. Then the tariffs hit in March 2018. Steel and aluminum prices spiked 30 to 50%, literally overnight. Suddenly, the $350,000 homes that builders had been planning to sell became $420,000 to $450,000 homes. Potential buyers who had been ready to purchase at $350,000 couldn't afford $420,000. Demand collapsed almost immediately. Builders were forced to cancel projects, delay groundbreaking on planned subdivisions, and lay off construction workers by the thousands. The ripple effects through Austin's entire real estate market were devastating. When new construction grinds to a halt, it creates artificial scarcity in the new housing market, which normally pushes prices up for existing homes. But that didn't happen in Austin because builders had already flooded the market with thousands of new homes before the tariffs hit. Suddenly, there was massive oversupply of new construction homes at elevated prices, sitting on the market unsold, while demand for those homes had evaporated. Entire subdivisions with hundreds of model homes sat with a minimal foot traffic and virtually zero sales. Existing home prices in Austin, which had been appreciating at 8 to 12% annually before the tariffs, suddenly flattened and then began declining. A home that sold for $400,000 in mid-2018 might sell for $385,000 in late 2018 or early 2019. Builders tried desperately to move inventory by offering concessions like free upgrades, paying closing costs, buying down mortgage rates, or offering extended warranties. But those tactics only worked marginally, and they eroded builder margins even further, sometimes turning potentially profitable deals into break-even or loss-making transactions. The entire market psychology shifted from fear of missing out to waiting for better prices. Austin real estate agents reported that the market's character changed dramatically in the months following the tariff announcement. Instead of bidding wars and multiple offers on every home, homes were sitting on the market longer. Instead of price appreciation, they saw price stagnation or declines. Instead of buyers competing desperately to win contracts, sellers were competing desperately to attract any buyer at all. The mentality shifted from fear of missing out on a purchase to waiting and hoping for better prices to emerge. By 2019, Austin's new construction market had contracted by nearly 40% compared to projections made before the tariffs. Thousands of planned homes were never built. Construction workers were laid off or relocated to other states. The entire real estate boom that had been fueled by tech company relocations and remote worker migration suddenly hit a wall, not because of economic fundamentals, but because material costs had been artificially inflated by a policy decision. What's particularly striking is that Austin's housing affordability crisis, which had been driven by rapid price appreciation during the pre-tariff years, was supposed to be solved by new construction adding supply to the market. But the tariffs destroyed new construction economics, which meant new supply never materialized. Austin got stuck with the worst of both scenarios: elevated prices from pre-tariff demand and no new construction to add affordable supply. Denver, Colorado, the suburban collapse. Denver's suburbs, which had been experiencing explosive growth before 2018, were hit particularly hard by the tariff-driven construction cost spike. Suburbs like Littleton, Aurora, Broomfield, and the broader metro area had been planning massive residential expansions to accommodate the influx of remote workers and job seekers relocating to Colorado. Building permits in Denver suburbs had reached levels not seen since before the 2008 financial crisis. When tariffs spiked steel and aluminum prices by 30 to 50%, suburban builders found themselves in an impossible position. They had already purchased land at prices that assumed $350,000 to $400,000 homes could be built and sold profitably. But suddenly, construction costs jumped to a level that required selling homes for $480,000 to $520,000 to make the same profit margin.
Land costs, labor, permits, and all other factors remained fixed, but material costs had exploded by tens of thousands of dollars per home. Suburban demand in Denver was particularly sensitive to price because suburban buyers are often price-conscious middle-class families trying to maximize square footage and affordability. When suburban home prices jumped from $380,000 to $480,000, the entire market segment collapsed.
Buyers who couldn't afford $480,000 homes weren't going to stretch their budgets to afford them, so they simply didn't buy. Some relocated to other states like Idaho or Montana. Others decided to rent rather than buy. Many delayed their purchase decisions indefinitely, hoping prices would come down. Some left Colorado entirely, moving back to their home states to escape the housing cost explosion. The effect on Denver's suburbs was exactly what economic theory would predict. New construction permits issued in Denver Metro's suburbs declined by nearly 50% in the 2 years following the tariff implementation compared to the years before. Builders abandoned projects. Subdivision infrastructure that had been built in anticipation of thousands of new homes sat partially completed and unused. Entire neighborhoods that had been graded, with roads laid out and utilities installed, never received homes built on the prepared lots.
Land values in suburban Denver, which had been appreciating rapidly at 8 to 15% annually, either stagnated or began declining as the speculative bubble in suburban real estate deflated. By 2020, before the COVID pandemic added its own complications to the market, Denver's suburban housing market had already contracted significantly from what it would have been without the tariff-driven construction cost spike.
The pandemic eventually created new demand through remote work and new migration patterns, but that demand couldn't fully compensate for the lost construction years from 2018 to 2020. Thousands of homes were never built because of the tariff decisions. City number 3, Phoenix, Arizona, the builder exodus. Phoenix had been one of America's hottest real estate markets in the years leading up to 2018, driven by California residents relocating and investment capital pouring in.
Major national home builders like Pulte Homes, D.R. Horton, and Lennar had massive operations and build plans in Phoenix. The city was expected to add 60,000 to 80,000 new homes annually during the 2018-2022 period. Phoenix was literally one of the biggest construction booms in America. Then the tariffs hit, and Phoenix's construction economics were obliterated.
Unlike Austin, which is a tech hub where remote workers and tech employees might push past price increases, Phoenix's market was primarily driven by middle-class families relocating from California and investors seeking cash flow. These buyers were extremely price-sensitive. When new construction home prices jumped from $380,000 to $470,000, demand collapsed within weeks. Builder backlogs that had stretched 18 to 24 months suddenly evaporated.
Homes that had 50 contracts lined up suddenly had 0. Builders who had been raising prices every quarter suddenly found themselves cutting prices to move inventory. Free upgrades became standard. Closing cost assistance became mandatory just to close sales. Some builders offered to pay buyers property taxes for the first year. Some offered to buy down mortgage rates by 0.5 to 1%. These concessions ate away at builder margins and made the economics of new construction even worse. The builder profit margins that had been 10 to 12% suddenly collapsed to 2 to 3%, making construction essentially unprofitable. The effect rippled through Phoenix's entire market. Existing home prices, which had been rising in anticipation of continued new construction demand, stalled out. Investors who had purchased properties expecting appreciation were suddenly stuck holding properties with no demand growth.
The migration of California residents to Phoenix, which had been accelerating at record rates, also slowed as the housing affordability crisis in Phoenix deepened. Why relocate to Phoenix if homes have become unaffordable there too? National home builders, faced with collapsing margins and stagnant demand, began pulling out of Phoenix or dramatically reducing their Phoenix operations. Pulte reduced Phoenix construction by 60%. D.R. Horton shifted capital to Texas.
Lennar exited several Phoenix developments entirely. Phoenix's construction market contracted by nearly 60% in the 2 years following the tariff implementation compared to pre-tariff projections. Instead of 70,000 new homes added annually, Phoenix added closer to 25,000 to 30,000, a staggering collapse in construction activity. City number 4, Nashville, Tennessee, the boom that stopped. Nashville had been experiencing a genuine renaissance in the years leading up to 2018.
Relocation from coastal cities, economic development, and new corporate expansions created genuine demand for housing. Multiple Fortune 500 companies and major financial services firms had announced moves or expansions to Nashville. New construction was booming. Multiple major builders had major operations in Nashville and the surrounding suburbs, including Franklin, Brentwood, and Hermitage, all seeing explosive growth.
The tariff-driven construction cost spike hit Nashville particularly hard because the city's housing demand, while real and robust, was price-sensitive.
Buyers relocating to Nashville from coastal cities like New York or San Francisco could afford higher prices because they were selling expensive homes on the coasts. But middle-class families relocating from other parts of Tennessee or the Midwest, or young professionals starting careers in Nashville, were extremely price-sensitive. When construction costs spiked 30 to 50%, those price-sensitive buyers evaporated from the market. Builder sentiment in Nashville shifted almost immediately. What had been a booming, confident market in early 2018 turned cautious and pessimistic by late 2018. Builders reported that sales velocity, which measures how quickly homes sell after listing, slowed dramatically. Homes that would have sold in weeks were taking months. Homes that had multiple offers were now struggling to generate even a single offer. Some homes that had been under contract with multiple backup offers suddenly went to contingent status, then back to active, then expired without selling. The tariff policy essentially created two classes of Nashville homebuyers: expensive coastal relocations who could afford elevated prices, and local middle-class buyers who couldn't. New construction catered almost entirely to the former group, which meant that local affordable housing supply dried up. Young professionals and middle-class families either postponed home buying or relocated to other cities with more affordable housing. Nashville's construction market, which had been projected to add 8,000 to 10,000 new homes annually during the 2018-2020 period, actually added closer to 5,000 homes annually.
That 40 to 50% reduction in new supply meant less pressure on existing home prices through new construction, which meant prices remained elevated even as demand from price-sensitive buyers disappeared. The result was stagnant pricing and slowing sales, exactly the opposite of what would have happened if new construction had proceeded as planned. City number 5, Miami, Florida, the international buyer's savior.
Miami was perhaps the most interesting case study because the tariff-driven construction cost spike hit harder here than anywhere else, but international buyer demand actually prevented a complete market collapse. International buyers from Latin America, Europe, and the Middle East who were purchasing Miami properties as investment vehicles or as status purchases weren't particularly price sensitive to a $100,000 jump in construction costs on a $2 million luxury property. Wealthy Latin American families, in particular, were using Miami real estate as a place to park capital and establish U.S. residency, and price sensitivity wasn't a factor. However, the middle and working class segments of Miami's market were devastated by the tariff impacts. Builders who had been constructing apartments and townhomes for middle-class Miami residents found their economics completely broken by the tariff-driven cost spikes. A $320,000 apartment that had been planned became a $410,000 apartment once material costs jumped 30 to 50%. Middle-class buyers who had been saving for years to buy simply couldn't afford $410,000 when they had budgeted for $320,000. The gap between what they could afford and what homes actually cost became unbridgeable. The result was a two-tier housing market. Luxury new construction aimed at international buyers and wealthy relocations continued to be built, albeit at slower pace and with reduced profit margins. But affordable and middle-income new construction essentially stopped. Entire planned projects aimed at middle-income buyers were canceled. Construction companies that specialized in workforce housing relocated to other states, where material costs and demand dynamics were more favorable. Some builders that had been building 500-unit apartment complexes for middle-income renters simply exited the Miami market entirely. Miami's affordable housing crisis, which predates the tariffs, actually worsened because of them. The tariffs destroyed the one mechanism by which affordable housing could be addressed: new construction adding supply and putting downward pressure on prices. Instead, new construction shifted entirely toward luxury product aimed at international and ultra-high net worth buyers, leaving middle-class and working-class Miami residents with virtually no new affordable housing options whatsoever. The effect on Miami's rental market was equally catastrophic and devastating to working people. Apartment developers who had been planning new apartment complexes for middle-income renters found their economics destroyed by tariff impacts. A 300-unit apartment complex estimated to cost $75 million suddenly cost $95 million to $100 million when tariffs were factored in. That $20 to $25 million difference between $75 million and $100 million is impossible to finance profitably with market rate rents in middle-income segments, so projects were canceled wholesale. Entire apartment developments that would have housed thousands of middle-class renters were abandoned. Existing rental prices spiked as new supply failed to materialize, pushing renters out of affordable housing entirely and into worse financial situations where they had to spend 50 to 60% of income on rent. The larger impact, what the tariffs actually destroyed. What's important to understand is that the 2018 tariffs on steel and aluminum didn't just spike prices temporarily. They fundamentally altered the trajectory of new housing construction across America for years.
Projects that would have broken ground in 2019 and 2020 never happened because builders couldn't make the economics work at tariff-elevated material costs. The tariffs didn't just delay construction. They permanently canceled it or redirected it to lower-cost markets or higher price point luxury properties. The housing shortage that America has faced in subsequent years and the affordability crisis that has worsened dramatically is partially traceable to this policy decision. New construction capacity that would have been built in 2018, 2020 never materialized. That capacity deficit had ripple effects for a decade or more. Existing home prices had to rise further to compensate for the lack of new affordable supply being built. Renters who might have bought homes at $350,000 if they had been built couldn't afford $480,000 homes, so they stayed as renters longer, reducing home ownership rates.
Economists who analyzed this period have estimated that the tariffs reduced new residential construction by 15 to 25% nationally during the 2018-2021 period, compared to what would have occurred without the tariffs. That translated to roughly 200,000 to 400,000 homes that were never built. Hundreds of thousands of people who couldn't buy because supply was too constrained. A housing crisis that deepened year after year.
The deficit in housing construction that the tariffs created persists to this day, years after the tariffs were partially lifted. What's particularly ironic is that the tariff policy was ostensibly designed to help American manufacturing and American workers, but the effect on construction workers was the opposite. Reduced construction activity meant fewer jobs for electricians, plumbers, carpenters, HVAC technicians, and general construction laborers. Tens of thousands of construction workers were laid off or never hired in the first place because projects were canceled. The tariffs that were supposed to protect American workers actually cost American workers tens of thousands of construction jobs that were never created in the first place. The policy also created a regressive economic effect. Middle-class and working-class families who would have purchased new construction homes at $350,000 were priced out entirely when those same homes cost $420,000 to $450,000. Wealthy buyers and investors, however, could absorb the price increases and continued purchasing. This meant the tariffs disproportionately harmed middle-class and working-class Americans while benefiting higher-income investors and wealthy relocations.